Welcome to This Explainer. Today, we're diving right into a seriously fascinating, fast-paced look at something that's constantly reinvented itself over thousands of years: money. We literally use it every single day, right? But we rarely stop to think about how its fundamental nature is shifting right under our feet. So let's map out exactly what's happening to our financial system, based on the data and research. You know what's really fascinating here? The dramatic irony of it all. Throughout history, literally every single generation believed they had reached the absolute final evolution of money. And guess what? Every single generation was completely wrong. Today, another massive transformation is already underway. And it's not just because cash is vanishing, but because the very definition of money is fundamentally changing. Okay, let's dive into this. The central question we're pulling from the research isn't whether money will become more digital. I mean, that's already a given. The real question is, what comes after cash? And, honestly, more importantly, who is going to control that next financial system? To figure that out, we have to first look at why money evolves in the very first place. Just think about how money has evolved over time. We went from lugging around heavy shells and salt, to precious metals and minted coins, to paper currency, and finally to credit cards and digital internet transactions. The pattern here is absolutely relentless. Society ruthlessly abandons old forms of money the exact second a faster, safer, or just more convenient alternative shows up. But before we look too far into the future, we need to establish a quick baseline. Any technology trying to replace cash has a massive hill to climb because it has to flawlessly execute three core things. First, it has to allow us to exchange goods without bartering. Second, it needs to reliably store value over time. And third, it has to provide a universal, common unit for pricing. If a new digital asset can't nail all three of those, well, it's just not money.
Right now, we're living through this massive shift from physical cash to digital and mobile payments. But listen, this isn't just about the convenience of tapping your smartphone at the coffee shop. This shift is generating an absolute goldmine of data and efficiency. Businesses can settle accounts way faster. Governments can track tax flows to help reduce financial crime. And the whole global economy becomes instantly, seamlessly connected.
And that brings us to the explosive rise of real-time payments. Contrast this with the old world where traditional international bank transfers could literally take days to settle. Modern networks are moving that money in actual seconds. To put that into perspective, we're reaching a point globally where payment speed itself is becoming a major competitive advantage. So that introduces the very first major contender for the future of money: blockchain. Now, instead of relying on a central bank or a massive institution to record your transactions, blockchain uses what's called a distributed ledger system. This means multiple participants maintain perfectly synchronized records of transactions, with zero central authority running the show. This is the exact innovation that paved the way for decentralized systems like Bitcoin and Ethereum, completely shattering all our traditional assumptions about how money moves.
Because this technology is so incredibly disruptive, we have to look at both sides of the coin here. Supporters argue that blockchain brings unmatched transparency, amazing network resilience, and real financial inclusion. On the flip side, critics point directly to extreme price volatility, regulatory gray areas, and massive security risks. But regardless of where you stand on it, blockchain has permanently forced a global rethink of digital finance.
And, that sheer volatility in traditional crypto leads us directly to our next concept: stablecoins. You can think of a stablecoin as this essential bridge between the wild frontier of blockchain and the totally predictable world of traditional finance. They are specifically engineered to hold a steady value, usually by referencing or being pegged to reliable assets like the US dollar or other national currencies. Now, perhaps the most heavily monitored development on the global stage right now is the central bank digital currency, or CBDC. Simply put, this is a digital version of a country's sovereign currency, but it's directly issued and backed by its central bank. This is a massive paradigm shift, folks. Instead of decentralized networks making digital money, the states themselves are stepping in. In fact, several countries are already running active pilots to test the waters on this. But just like crypto, CBDCs invite some pretty fierce debate. Supporters really believe they're going to modernize payments, boost inclusion, and massively improve economic efficiency. However, critics are raising vital alarms regarding user privacy, the cybersecurity risks of creating centralized honeypots for hackers, and the very real potential for government overreach in tracking citizen spending. It is a super high-stakes balancing act between innovation and civil liberties.
And this brilliantly illustrates the crossroads we're currently standing at. On one hand, you have cryptocurrencies, which are purely decentralized and totally independent of the state, and on the exact opposite side, you have CBDCs, which are highly centralized and sovereign. They are totally polar opposite philosophies, ironically built on the exact same technological foundation.
But it's not just the type of money that's changing. It's the back-end mechanics managing it too. Artificial intelligence is completely reshaping finance. We aren't just talking about automated customer support chatbots here. We're talking about real-time fraud detection that flags a stolen card in milliseconds, and machine learning models analyzing insanely complex markets for personalized financial advice. The digital money itself might not be intelligent, but the systems moving it absolutely are. This brings us to another huge transformation happening right beneath the surface: embedded finance. Think about the last time you stepped out of a rideshare, like Uber, and the payment just happened automatically. Financial services are literally being built directly into everyday apps and e-commerce platforms. The lines between a tech company and a traditional bank are rapidly blurring, all for the sake of absolute consumer convenience.
Of course, as money goes completely digital, the stakes absolutely skyrocket, because the future of money depends just as much on trust as it does on technology. Cyber attacks are becoming ruthlessly sophisticated. This means financial institutions are being forced to pour billions into cybersecurity, fraud prevention, and identity verification, because if a system loses the public's trust, it fails entirely, no matter how brilliant the underlying code is.
So, with all these wild new technologies, is physical cash completely dead? Well, not exactly. Cash offers unparalleled resilience during things like power grid emergencies, and it guarantees privacy, so it's highly unlikely to vanish entirely. Instead, our research points to a future of coexistence. We're going to see physical cash, digital deposits, instant payment networks, stablecoins, and CBDCs all living side by side, serving different needs in one giant, highly connected ecosystem.
Now, looking even further ahead, the experimental concepts on the horizon are truly mind-bending. Just imagine a world of frictionless micropayments, where you pay a fraction of a cent per second for digital content as you consume it. Or what about machine-to-machine industrial payments? Picture your autonomous car negotiating and paying for its own charging automatically, while an AI optimizes your budget in the background. We are quite literally heading toward an Internet of Things that actively participates directly in the economy.
Which brings us to the real climax of this incredible evolution. The greatest transformation won't be the disappearance of cash, but the fact that money itself is becoming an invisible layer. Think about electricity. It became so reliable and ubiquitous that we completely stopped thinking about it. Soon, payments will just happen automatically in the background. Money will simply become this invisible, seamless current powering our daily lives without demanding our attention.
Throughout history, every single evolution of money has rewritten the rules of society. And this next chapter, it isn't being built in bank vaults. It's being built in data centers and programmable software. So I'll leave you with this final, provocative thought from the research. We may very well be remembered as the generation that stopped carrying the future in its wallet and started carrying it in its code. So the question is, are we ready for an economy run entirely by software? Thanks for joining me for this explainer, and I'll catch you next time.